Welcome to Capital Link's Trending News podcast series. In this podcast series, we discuss with company management on recent news and announcements that they have made. I am Nicolas, Bornozis, president of Capital Link, and I'm delighted that today we have with us from Navigator Gas, Mr. Oeyvind Lindeman, Chief Commercial Officer, and Mr. Randy Giveans, Executive Vice President, Investor Relations and Business Development. Our discussion today will highlight Navigator's recent business developments and the outlook for the LPG and chemical gases market. A quick reminder of our disclaimer that these podcasts are provided for informational and educational purposes only. They do not constitute investment advice or advice of any kind. And of course, Capital Link bears no responsibility for the content. And as an additional disclosure, we work on Navigator on investor relations. Navigator Gas trades on the New York Stock Exchange under the ticker symbol NVGS, and it is the owner and operator of the world's largest fleet of handysize liquefied gas carriers and a global leader in the seaborne transportation services of petrochemical gases, such as ethylene and ethane, liquefied petroleum gas and ammonia, and also Navigator owns a 50% share through a joint venture in an ethylene export marine terminal at Morgan's Point, Texas, on the Houston Ship Channel in the US. So now let's start with our discussion, and I will address the first question to Oeyvind. Oeyvind, Navigator has demonstrated significant growth in total operating revenue and net income, as we have seen, compared to the previous year. What are the key factors that you attribute to this impressive financial performance, and what strategies have you implemented to sustain and build upon this success in the upcoming quarters?
Nicolas, I think it's important to understand that our whole positioning in the marine logistics chain is that of flexibility. So we have chosen to invest in assets that can carry multiple different products in the gas carrier segment, being ammonia, LPG, and petrochemicals. And during the last quarter, all three of them fired on all cylinders. So petrochemicals were doing very strongly, LPG coming into the winter months, which is generally a stronger time period. And also ammonia is also creating a lot of demand. So those three cargoes we can carry, and we mix between them. We change grades between them. That's important to understand. A little bit more details into each one. But also at the same time, two other things happened. One was disruptions in the Panama Canal. So the transit through the Panama Canal became difficult. Therefore, cargoes that we exported from Houston to Asia had to go via the Cape, increasing distances. And also later in the quarter, we had disruptions in the Suez Canal transit, which also caused some inefficiencies for shipping. Inefficiencies for shipping trade lanes generally means that you need more ships to carry that one product, therefore is a positive for the freight market. The second thing that happened was that the ethylene export terminal in Morgan's Point also fired on all cylinders, exporting ethylene from the US to the world. We have the largest ethylene fleet available, so it contributed employment to those ships, servicing the US petrochemical market for exports. So those three things was important that happened at kind of the same time. Three markets that we can carry all worked very nicely, contributing demand for our ships. The ethylene terminal, fully operational, working. The product was attractive in the market because of price differentials, and also you had these inefficiencies in the Suez Canal. So all those things culminated, creating a healthy demand for gas carrier shipping. At the same time, no new additional ships were coming into the market. The order book is very low. So it was good fundamentals for that quarter, which we also see continuing going forward.
So thank you. I mean, as you mentioned, these combination of several factors culminating to strong fundamentals drove the market. Looking ahead now, what are the main drivers, or what is the outlook for the main markets for LPG, ethylene, ethane, and also for your shipping operations? So looking ahead.
Yeah, so we, Navigator, we can't control what happens at the Panama Canal or the Suez Canal and so forth, etc. But what we do look at and take advantage of is the cheap US gas. So what does that mean? So most of our export employment stems from the US. US gas in all its shapes and forms is cheap compared to other parts of the world. So that is ethane, it is LPG and natural gas. We don't export natural gas, but when you drill for shale gas, you get natural gas and what we call gas liquids. And the gas liquids is ethane and LPG in vast amounts. And that is valuable in the world, and it's cheap in the US. So therefore, bet then is to deploy our fleet, have assets that can carry these commodities from the US to the world, including ethane and ethylene. So as long as US and natural gas liquids production remains healthy, which it looks as if it's going to be for a very long time going forward, looking at the Permian Basin and so forth, as long as US gas is cheap, our business will be very healthy with export markets, because US are producing more and more and more, and your local domestic demand is flat, meaning that any additional incremental molecule that is produced will have to be exported. If we look to our midstream partners in the US, companies such as Enterprise Product Partners, they are investing heavily in gas processing plants, fractionators, and also expanding their terminal capacity. And that tells us, me, one thing, is that the guys in the US also believe the same, that natural gas production is increasing. You need to create takeaway capacity to find a home for it. And the home is across the seas, and that's where we come in. So that is a very strong and important fundamental that will drive Navigator's business over the next decade. On the back of that, which we'll get to a little bit later, I think it's our expansion of our existing terminal is based on the same principle that more gas liquids production means continued cheap gas. Therefore, we need to expand export capacity, which we are doing with Enterprise Product Partners. We're doubling the capacity of our existing terminal. And that will, of course, give incremental demand for the shipping part of our business. So it all fits together quite nicely.
And you opened up the door to the next question that I wanted to address to Randy, exactly about the ethylene export terminal and the expansion plans. Together with your JV partner, Enterprise Product Partners, you have agreed to invest in the terminal expansion project, which is a significant step towards increasing export capacity, as you mentioned. So can you elaborate on the progress of this expansion project, the expected benefits for the company and your partner, and how does it align with your overall long-term growth strategy?
Sure, Nicolas. Yeah, happy to. So for that terminal, right, we are expanding our existing facility of 1 million tons per year of ethylene exports to basically triple that, could get up to 3 million tons. We are going to convert, and in the process of converting, an existing ethane train at Morgan's Point to be flexible for both ethane and ethylene. Also, we are buying a quarter of that capacity outright. So that will be 550,000 tons per year going forward, starting January 1st, 2025. So starting then in 25 and beyond, we'll do at least 1.55 million tons, plus additional flexibility to do more and more as the years progress. In terms of timing, 100% of the equipment has already been ordered. About a third of it has already been delivered. We expect a lot more components to be delivered in the coming months. And then throughout the summer and the fall, that will be the time where we fabricate, assemble, construct that new expansion. on top of and adjacent to the existing ethane terminal to be able to make it flexible. So right now we're all set to complete this construction in December of 2024. So hopefully we'll have a few incremental spot cargoes between then and when the new contracts start January 1st, 2025. So right, we're less than 9 months away from having full operations on that expanded terminal. The cost for us is going to be between $125 and $130 million. We've already paid $43 million up front. We have another payment in about a week now, and then we'll have the big bullet in December upon completion of the expansion. So in terms of EBITDA contribution, it's hard to really go into those details because we're still in the process of doing the offtake contracts for the take or pay from the customers. But, I think a fair estimate is at least 50 to 60% higher than existing, just because that's the capacity. But also pricing has improved a little bit. We do think there will be some incremental spot cargoes for that flexible component of the train as well. So we're expecting a much stronger contribution from the terminal to our bottom line starting in January, right, and going forward. Also, in terms of how it relates to our core business, as Oeyvind was saying, right, shipping is our core, and we have a lot of ethane, ethylene capable ships that will be able to move these products to the end users in Europe and Asia. So it should boost that market as well. So in terms of growth for onshore infrastructure, that's really been a focus of Navigators since this project really commenced 5 or 6 years ago. And we expect to continue to do more onshore infrastructure projects like this in the coming years. So we have internal goals by 2030 of increasing these numbers in terms of the EBITDA contribution and other things. So this project will certainly move that needle starting in 2025.
Randy, as both you and Oeyvind mentioned, the marine operations are the core business. However, the fact that you can combine it with the export terminal, I understand it creates quite a competitive advantage, and it's quite a unique feature in your company's profile and strategy. I don't know if you want to add anything to that.
Yeah, it certainly provides some earnings stability, right? Obviously, within shipping, there's some volatility. Now, I will say this, as Oeyvind was saying, our product diversification and geographic diversification really take away a lot of that volatility, right? You see our highs and lows are much more moderate than a lot of other shipping sectors and shipping peers. Additionally, on this onshore infrastructure assets, these contracts are take or pay, right? So it's very streamlined, straight line earnings throughout time. Also, when it comes to the actual operations of our ships, right? We know in advance when the cargoes are being lifted, where they're going, how much of the cargoes are going to each region. So we can kind of position ourselves strategically with that. So there is some benefits to it for our shipping business as well.
Thank you. Now, Oeyvind, coming back to you, JVs and strategic investments have been one of the major growth factors in your overall business. So you recently announced a new investment, Azane Fuel Solutions, for example, aims to build the world's first ammonia bunkering network, contributing to the transition to green fuels for shipping. So can you share with us more about the strategic vision behind this initiative, the expected impact on the maritime industry as a whole, and how it aligns with the company's sustainable goals with Navigators? And of course, this is with the occasion of the 14.5% acquisition of an interest in Azane Fuel Solutions. How does this fit with your overall strategy? And
it's a good question, Nicolas, and I'm glad you asked, because finding a low carbon fuel for the shipping industry is something many people are looking at and are very interested out, because apart from doing the right thing, clearly the regulators like IMO is dictating that the shipping industry as a collective will find alternative fuels that are low in carbon. And there will be a few different options available to the shipping industry, one being methanol and so forth, etc. But ammonia can be scaled and is also quite competitively priced against other low carbon fuels that we Navigator see that as a tremendous opportunity for the shipping industry to avail themselves of, to battle or be part of the green transition, but also as a business opportunity, first and foremost for Navigator, whereby we think the volumes will be quite substantial, that we need to transport ammonia from one place to another to service bunkering operations around the world. So nobody in the shipping industry will construct ships with ammonia engines unless there's an infrastructure there to provide for that fuel. Therefore, one of our large clients, Yara Clean Ammonia, together with them, we had co-invested in this opportunity. At the moment, it's small scale in the Scandinavian, along the Scandinavian coast, but of course the company has big ambitions to service a wider market. But for Navigator specifically, is two things. One, to unlock the opportunity for the shipping industry, because the more ships that will use ammonia as fuel will benefit Navigator as you know it today, because we need to then transport this fuel in bulk to those locations, bringing demand to the segment. So just to put in perspective, 17 million tons of ammonia is transported today, and that goes to the fertilizer business for food production, which is, we have 10 ships doing under ammonia transportation today. The collective shipping industry is using more than 200 million tons of fuel per year. So if a small portion of that shifts over the next 5 to 10 years to ammonia, is a huge amount compared to what is transported today in ammonia. And we are, of course, encouraged by that opportunity, because all our ships today can carry ammonia. And imagine having a fraction of the 200 million tons of marine fuel being ammonia. That's a tremendous growth in that segment. And we want to play in that. And I think that will boost Navigator's size and influence in that market tremendously.
Well, thank you for this detailed reply. And I think it's worth remaining on this point for a minute longer. You pointed out very correctly that the ultimate choice or acceptance of a green fuel is not only the commercial production of that fuel, but also its availability. Bunkering is very important. So you need port infrastructure, bunkering, to make that fuel available worldwide. So it's particularly interesting, exactly, that in the ammonia space, this is quite a new and important initiative.
Yeah, and again, US is taking the charge there with its capacity to scale up with vast amounts of volume in blue ammonia, where you produce ammonia and you capture the carbon. And if you look at economics, even production in the US and transporting it to Europe or Singapore or wherever, it makes a lot of sense from an economical standpoint. And you need that for the shipping industry to change. And that's going to happen. We are doing a ship-to-ship ammonia transfer tomorrow in South Africa, which is one of the first sort of ammonia ship-to-ship being conducted in the world. We're pretty excited about that. That is for the fertilizer business, but it's kind of simulating a ammonia bunkering operation from one ship to another. So we are pushing the agenda to promote this where we can. We are partnerships in the Global Center for Marine Decarbonization in Singapore, piloting the exact same operation, and also in the port of Rotterdam. But the place we're doing it first is in South Africa, and you'll hear more about that. But it's important for the world to understand that this isn't, as long as you do it safely, it is 100% viable. And that's what our intention to prove tomorrow.
Thank you. Now, turning over to Randy, Randy, regarding Navigator's return on capital policy, how do you determine the balance between quarterly cash dividends and share repurchases? And what factors influence the timing and magnitude of these capital return initiatives?
Yeah, so backing up, back in December of 2022, so let's call it 16 months ago, we started repurchasing and announced a $50 million share repurchase authorization and program. And we didn't just implement it, we completed it, right? So from December 22 through May of 23, we bought back $50 million worth of Navigator stock, 3.8 million shares at $13.12 per share. Subsequent to that, we started a new return of capital policy. Now that is based on 25% of net income, right? We do have these very attractive growth projects like the ethylene terminal expansion, like ethane. So 25% we felt was a good number in terms of the returning of capital. Now, part of that is a fixed dividend, 5 cents per share per quarter, no matter what. So regardless of earnings, that is fixed. The floating component, up to 25% of net income, will be either additional dividends or share buybacks. Now, every quarter since we started this policy back in the summer of last year, we have opted for share buybacks. Why is that? Well, when our share price is currently in the mid-15s and our NAV is $24 or more, it makes a lot of sense to continue to buy back shares on a quarterly basis. So that has really been the factor, the determining factor of why we have opted for share buybacks instead of additional dividends. So going forward, we are committed to both, right? We are committed to paying dividends, and we will continue to do so, and also share buybacks, right? Obviously on the quarterly basis, as long as we're making at least 20 cents per quarter, because then 25% of that is your 5 cent quarterly fixed dividend, and then above that will be the additional buybacks. But also, when the opportunity presents itself for additional buybacks, we still have authorization for more than $20 million remaining on our existing authorization that we could use imminently, right, for share buybacks whenever. So that is something we will continue to focus on in returning capital to shareholders going forward.
Thank you to both. As we are wrapping up our discussion, any final thoughts on any new initiatives that you are working on, any new developments? What can investors look forward to in terms of actions and initiatives that enhance shareholder value and help you implement your overall strategy?
Well, I'll give a first shot on that, Nicolas. So first and foremost, at the core, Navigator is all about providing safe, efficient, and reliable marine transportation to our customers. And that is very important to us. And from there, then the returns will come. So with the core of the marine, what we're trying to do is then connect it, integrate with infrastructure projects, both in the supplier side, the export side, and the importing side. Why? Because it provides employment to the core fleet, enhancing profitability for the vessels, and also in its own right, making financial returns onshore. So those two items is very important, and we're working hard to add more of that to the business. We're obviously expanding the ethylene export terminal, which is very meaningful, and looking at other opportunities in ammonia and CO2. Secondly, increasing the fleet, preferably in the order of consolidation, and then if not consolidation, then new building. So you have the assets that the future needs and our customer needs, and that can also service those infrastructure projects. Third is we are pioneering and being the forefront on the green transition in ammonia we talked about, and the tremendous opportunity there, as well as CO2. So we want to be a big fish in a small pond. That's where we can make an impact, and that's what we have been doing up to this point in the handysize segment, in ethylene specifically, ethane, and the future also in ammonia and CO2. So the new trades that will develop we want to take part of that. And that comes with more ships, higher market cap, and so forth, etc. And the investor should look at that for Navigator. And I think we're very uniquely positioned in that sense compared to any of the other listed gas companies that I know of.
Thank you.
Yeah. And adding on to that, I think that really spells out our strategy for the next 1, 3, 5 years, right? And I think there's a lot of long-term growth there. But also want to talk to some short-term, near-term catalysts coming up. Obviously, we have our 1Q results that we will announce in mid-May. So stay tuned for that. We have time charters that continue to get rolled at higher rates. We have offtake contracts close to being signed for the terminal expansion. So there are certainly some near-term catalysts coming in the coming weeks and months as well, obviously as the market continues to improve in the coming quarters and years.
Well, thank you very much. It's been very interesting. I mean, our discussion was on your recent business development, the outlook for LPG and the other markets you are active in. And I appreciate very much that we had the opportunity to discuss the uniqueness of your strategy and your company profile, with the marine operations being in the center, but exactly all the other business you're building around it, which essentially ensure the viability, growth, and stability of the marine operations, and put you at the forefront of the green shipping and so on. So thank you very, very much for being with us today.
Thank you, Nicolas.
Thank you. Our pleasure.